thank you very much. We'll do a quick roundtable today. We have a really interesting group of panelists because they're representing different parts of the ecosystem that is around the financial advisors. So we have Deborah Debas here from Desjardins. Deborah, can you tell us in a couple of words your role at Desjardins, please?
Of course, hi everyone, and thank you for having us today. My name is Deborah. I work for Desjardins Wealth and our Desjardins Investments, and we are the manufacturer of investment funds and ETFs for Desjardins, and among which are a very large responsible investment fund line. And my main role is basically to educate and help advisors understand the value add of ESG and responsible investment, both for their portfolio model, but also for their practice and their clients, and see how they can really optimize and elevate their relationships with clients by integrating responsible investment.
Thanks, Deborah. And you constantly post really interesting advice for advisors. So if you're interested in the topic, you should certainly follow Deborah and Mo and Thomas on LinkedIn. All right, turning to Mo. Mo, can you tell us quickly your role at NEI, please?
First of all, thank you, Maria, for the opportunity. Greatly appreciated. I'm Momaz, Vice President of Sales in NEI Investments. I help advisors navigate the Wild West landscape of ESG investing while proving to them that we walk the talk and provide better returns, less risks, and a lot of risk-adjusted returns than peers. So I'm here to help. Thank you, Deborah. Thank you,
Thanks, Mo.
Maria.
Thanks, and thanks for the work you're doing for advisors. And now Thomas. So Thomas is, by the way, one of our top performers in the study that we did, interviewing 40 financial advisors and wealth managers across Canada, representing 16 financial institutions. And Thomas was in the top 3. The 2 others were from Desjardins. It just I couldn't have too many Desjardins on this panel, and so Thomas is representing IG Wealth Management. Thomas, could you briefly explain what your role is as a wealth manager?
Yes, of course. Thank you, of course, for having us on this opportunity. So I'm a dealing representative and a chartered investment manager. As a responsible investment specialized and security financial advisor, I try to bring what we call a bespoke holistic approach to my work, collaborating with families and professionals to orchestrate comprehensive financial strategies with a high social impact. So I'm specialized in estate security, wealth planning, and portfolio management. And I try, as my best at least, to serve as a trusted guide at the center of my clients' financial health.
Thanks, Thomas. And when we spoke with you, when you didn't know that we're doing a study, you really impressed me in the level of knowledge and expertise you have around the systematic issues, the clean energies, the solutions, the greenwashing. So I'm certain there's a whole dedication, focus, and work that goes into feeding that knowledge. And I'm looking forward to hear from you on how do you achieve that. Perfect. So let's move on to the first question, and we'll try to keep it short, given that we're a little bit late already on the session. But for each one of you, starting with Deborah, I'd like to know what are the really top challenges that you see that the financial advisors face when it comes to integrating the conversations around ESG priorities into their practice. So maybe give me 1 or 2 top challenges that you hear from them, and then we'll have Thomas go last because he's going to tell you how on spot you were with your thoughts on this.
All right, the answers that we get when we ask advisors, what is your main concern with responsible investment, or why are you not talking about it as much as you'd like, is greenwashing concerns about the companies in our portfolios, but also the funds and how they're made. They also have questions about return. And even though in the long term, we know that there's no compromise to be made, the question still remains. But I think the number one issue that they run into is that they're afraid that they don't have all of the answers about environmental, social, and governance issues and how all of these are integrated in the strategies. And they are, I think, a bit afraid of the type of questions or very specific questions they might get in their offices. And so that's why we're actually there to educate them and help them access the information they need to answer the questions.
Yeah, and the way to you, Mo, now I know the big problem is the Wild West still, right? So tell me about your thoughts about top challenges.
Well, I second everything just said by Deborah, especially the concern about potential trade-offs between financial returns and risk mitigation features and sustainability projections. People, they think, falsely that if you invest responsibly, then you will reduce return or increase risks. uh, we can prove them wrong. We have a lot of funds to prove them wrong. But I would add some other challenges, such as, first of all, the limited knowledge and understanding of sustainable investing concepts and strategies, coupled with the lack of access to reliable and comprehensive ESG data. Right now, we don't have any comprehensive ESG data. Second of all, we have the difficulty in quantifying and measuring the real impacts of any strategy on investment performance. The attribution analysis doesn't cover yet any ESG criteria or the impacts of any exclusionary screening and other sustainability strategies. And last but not least, some advisors, they had issues finding suitable sustainable investment products that align perfectly with client risk preferences or sometimes investment goals. Comes to my mind clients looking for Sharia compliant halal or halal investments. Some Muslim investors, they need Sharia compliant or halal investments. Some ladies, they look for women leadership funds, or someone who's just looking for a fossil fuel free fund. And there's a lot of greenwashing going on.
Thanks, Mo. I think we'll come back to a lot of those points later on. We'll talk about tools and resources, talking about how to solve for greenwashing and give them confidence in the ESG data as well. But now I'll turn to you, Thomas, and let us know, what do you think about the comments that was just made now? Are they the same challenges that you face? And what else would you add?
I completely follow what was said. Definitely, one of the biggest challenges that I had from my practice, because before talking about ESG fund, we used to talk about green fund to try to open this fund, and the green fund, yes, greenwashing. That's the first. I give often the example of Suncor and Enbridge was incorporated in the ESG fund. Why? But because the energy is their, let's say, that's their job, so they don't want to lose their clients. So Suncor and Enbridge used to be the main provider of new fossil-free energy with photovoltaics, etc. But the clients cannot understand that, Thomas, I'm looking for a green fund and you're giving me that. So after discussion, finally, some manager, they redraw this kind of company from on their fund. But yes, ESG now, it's a catch-all expression. So we need, I agree, more specific rating. We have a lack of data. It's really hard for an advisor to say, okay, what's the methodology of Morningstar, as an example? It's like a huge document and it's too global, let's say, not specific enough. But we live in a world of change, and anyway, it's a huge opportunity for us and for our clients, because now ESG will impact all of the companies worldwide. So you have to jump in. You don't have any other choices.
Thanks, Thomas. So we'll move to that very initial stage of meeting your client and understanding what are their ESG priorities. And I'll start with you this time, because I'd like to hear firsthand, what is your strategy? What is the question, or what is the approach you take when you talk to a client for the first time to understand whether or not this is something that would interest them?
So yeah, you need to incorporate anyway this ESG related question into the client intake process. So as an example, I ask, what about values, goals, preferences? It's a bit general, but an example is, let's say you don't have any more financial restriction. How would you use your time? If you have to choose one organization where are you going to go to help them? Children, pets, whatever. So people, they can project in how I can have an impact, a real impact on my daily life with this kind of question. But anyway, you have to open the conversation. Same way that financial advisor, they have to evaluate the goal and objective of the client, transfer of the company to the next generation or selling it, early retirement, transmission of capital of the next generation, charitable donations. So that's it's now have to be part of the entire meeting process with the client, and then you can educate them, telling them that again you will have to integrate ESG factor into your life because it's going to impact all of the company. Like, and there is a huge opportunity. Example for growth. I agree with Mo. You can have a good financial return by integrating these kind of factors. Couple of example, just one example, the agriculture challenge due to population growth will become a significant opportunity for value growth. Definitely. It's a big challenge. And companies are jumping on that, on that challenge. We can be part of that and have a very good result.
I'll just bounce back on what you just said. So it feels like actually asking a question of what are your values, what are your priorities, where do you volunteer? That's a pretty simple question. You don't need to spend hours to already get that feeling of what matters to the client. But the second part, what you're saying is really interesting because it's really, as a financial expert and person who's guiding your clients on where to invest, you need to be attuned on where's the world going, right? Where's the value going? Where's going to be sectors that are growing, the sectors that are degrowing. And so if you're not attuned to that, whether or not it's ESG, technology, or other industries, it doesn't matter. You just, as a this is your fiduciary duty, right? To be aware of all those things. Thanks, Thomas. That was great. Mo and Deborah, I'll ask you just very quickly, Mo first, to bounce and add if you have anything in terms of a trick of engaging into that conversation and understanding the client's priorities.
I would second everything you said, Maria and Thomas. For sure, a lot of fund codes, a lot of companies, they have in their questionnaires just a simple one closed-end question. Do you want to invest responsibly? Yes or no? This is not that's enough. We need more open-ended questions. We need to add in these questionnaires or surveys a lot of details, ESG-related questions about values. We need to provide educational resources, articles, case studies on sustainable investing. And at the end, advisors need to engage in a lot of active listening and asking lots of open-ended questions to encourage clients to share their views on sustainability, what they're looking for, and sometimes we can dig some new stuff that we don't find with the simple closed-end question. Do you want to invest responsibly? Yes or no? We need more meat on that, if you can.
Yeah. What does it even mean, right? Invest responsibly. It's like it's a green or non-green. There's so many shades. It's crazy. Thanks, Mo. And to Deborah.
Yeah, no, I mean, piggybacking on everything that was said, just asking if you're interested in responsible investment is not enough because I think it's 1 out of 3 Canadians who know what responsible investing is. And so you need a little bit more meat around that bone and you need to show them examples. And I mean, Thomas nailed it. It's understanding who that client is as a person. And that's the first thing you do as an advisor, right? It's know your client. Of course, you know them as an investor, but I think if you also know them as an individual and understand what is important to them and how they prioritize how they live their lives, you'll see that they might appreciate having a say as to how their capital is invested and how it's growing. They make a lot of decision according to their values and what type of outcome or legacy they want in their lives. And maybe once you get to know them better, the one thing you can ask is, well, now that I know you and I know what is important to you, would you like your investment portfolio to work in the same direction as those decisions you've been making everywhere else in your life? And it might not be perfect, 100% aligned, but it is going in the right direction. And it is probably better than a conventionally managed portfolio.
I think it ties in a lot also with that global societal awareness that maybe the biggest impact you have in contributing for a better world is not necessarily recycling and composting, which is great. We need to do those things, but look at your pension fund, look at your retirement savings, look at how your money is currently investing. And what are you contributing to, right? Like all these companies are either destroying our society and environment, or they're contributing to make a world better place. But certainly it's not black and white. And I think that societal awareness is coming slowly. Obviously, financial factors will always be predominant, especially with older generations. But I think with millennials coming into play and seeing that a lot of them even ready to take lower salary but to work for a company that actually does a positive impact in the world, I think the future generation of investors will say, I'm okay with lower return. Make sure this is contributing to a better world where our kids can thrive. So I hopefully there's a shift, hopefully. All right, moving on to the next question. So now we talked about KYC. And KYC, I think, even in retail advising, can be done relatively quickly and efficiently. But then the second part, which is much more complex, is knowing your product. Do you have a product that you can sell based on the KYC that you discovered? And are you able to have that conversation? And so we've had a preparatory call with Mo, and he shared with me what he has to provide in addition to fact sheet to the advisors in order for them to have information to engage in those conversations. So Mo, I turn it over to you to share us a bit that challenge that advisors face today when it comes to knowing your product in sustainable investing.
Well, thank you, Maria. And I totally agree with you to switch gears from not only know your clients, the KYC, to more like know your products, to KYP. This is one of the main aims of the new client-focused reforms that have been done by the regulators, is to match the KYC, the know your clients, by know your product. So just to do a big match between what the client needs and what the products has to offer. The issue that we have it right now is a lot of a fund fact sheet. Well, indeed, they are valuable resources for advisors. They offer all basic information, especially financial returns and risks and metrics and stuff like that. But they're not sufficient to fully understand and grasp the investment philosophy of any ESG fund. We need to improve clarity and confidence. We need to add a lot of additional information. We need to add the ESG rates and the criteria that are used for screening any engagement activities undertaken by the fund manager or even the fund manufacturing companies. We can incorporate more risk. We can incorporate a lot of ESG measurements because if we add some case studies, we add some real life examples of the fund environment and social impact. And when we talk about the impact should be, first of all, tangible, intentional, and measurable. And the last thing, but not the least, it should be explained in plain language. I will give you an example. The example that we discussed last time, Maria, we have one of our sub-advisors, okay, Impact Asset Management. They provide annual impact reports in which they would say that for each 10 million euros, it will save 61 million gallons of water. But it's 61 million gallons. We don't know if it's a river, if it's a lake, if it's, but then they will add something I found nice, in plain language, they will add that it's equivalent to 550 household annual water consumptions. So me, when I sold the fund to even my wife, I told her our 10K will reduce water consumption of 5 households. We'll save and will help save water consumption of 5 households, meaning all my neighbors living in my crescent, I'm saving water, so I can fill up my swimming pool if I'd like, because I'm saving water. I have proof that I have some tangible measurements, impact measurements. So that's what we need right now in the fund fact sheet.
That's so cool. And actually, I'm even thinking like your performance report, like you're getting your statement. Here's how much percentage your return is and how much impact you could do. This is how much greenhouse gases emissions. This is how much water was saved. It wouldn't be that fantastic, but obviously we need regulators to come on board on this. And from what I know, it's not a simple process. So
Okay.
Deborah, turning to you then, uh, could you share us a bit like what is your process of training your advisors on the products that you guys offer? And there's quite a bit of them. So how do you make it simple for them?
Yeah, we're trying to make it simple, but not so simple that they would actually oversell or greenwash the fund. So there's a fine line to be walking on here. And regulators have stepped up. So they have, in the past 2 years, raised their expectations in terms of ESG disclosure, especially in the regulatory disclosure, but also requiring that if your fund has an ESG objective, then how you talk about it must make sense with the intent and the extent at which you use ESG criteria and approaches to make the fund, basically. So if you don't use it that much, don't make a big advertisement out of it. So there needs to be coherence in between them. So of course, in the regulatory disclosures, so the prospectuses, the fund fact sheet, you'll find a bit more information now in the industry. But above and beyond that, what we've done is we've created KYP fact sheets that go above and beyond the regulatory fact sheet. And what we've included in there is the identification of the ESG approaches as identified by the CIFC. The CIFC is the Canadian Investment Fund Standards Committee. They're the ones who decide what is a Canadian value fund, what is an emerging markets fund, what is a green bond fund, for example. And so they've identified the ESG approaches, exclusions, integration, engagement, thematic, and impact investing. And so it's basically a check mark. It's a 1 or 0 approach. It's not a judgment on the quality of the approach, but that's a start, right? So if you're looking for a thematic or an impact fund, or if you're looking for a fund that has exclusions, at least you know where to start. And so the information is available on their website. And we've replicated their checkmark system on our own KYP sheets. So if you're looking through the Sociétaire Sustainable Fund lines, then you are able to find what you're looking for. And maybe what we've done different this year is we've added disclosure that respects the CFA standards in terms of ESG disclosure. So it really is a comprehensive description of how we integrate ESG in 3 of our popular funds: the Sustainable Clean Tech Fund, Sustainable Positive Change Fund, and Sustainable American Equity Fund. And so if you want to understand where portfolio managers get their information, the type of team that they're working with, how they're integrated, how they look at risk and opportunities, how they evaluate the companies before including them in the portfolio, then you'll have a lot more information. And it's really detailed. But if you are like Thomas and you want to specialize in responsible investment, or really if you want to make sure that it makes sense for your model to integrate it, then I do invite you to look into the different documents that we have. And that's above and beyond webinars and also articles about ESG issues that you can use to just better understand how this represents risks or opportunities for your for portfolios.
Thanks, Deborah. It seems like that's a great way to do an initial screening of like you have 25 funds, they're all somehow ESG related. But if you have that taglines of, okay, it looks like the client really wants to avoid fossil fuels, I can screen out exactly the funds they have that exclusion baked into them and then go from there. So that already narrows the funds that I have to look at. So Thomas, in your practice, I think you have a lot of funds available to you, right? You can offer multiple sustainable investing products. So how do you do, like, do you have preferred funds? Do you have this kind of screening system? What's a day-to-day like to be able to identify the right fund for the right ESG priority?
Yeah, so yeah, it's a machine. Let's say, let's face it. And I want to relate the know your client and know your products because it has to be linked. So knowing your product, I would love to see develop different rating of ESG. I don't more on what I said before. It's like it's too constant. You client need to see green rating. They need to see human rights rating, and you have to help them to navigate through that. So yes, how do we do? We check, of course, the rating that are available, but they are definitely not enough. And I'll give you an example. A client wants to invest in photovoltaics. Okay, fine. You know that now 7 of the 10 biggest company are from China. So yes, it's green investments, let's say, but how am I feeling about the way that certain government manage the human rights can fit with my investments? So now I join Deborah that you're gonna have to make concession, and because you won't have like the perfect fund. Even if you want to create a fund, I can create a fund for my clients. Let's pick like the company that you want. We're gonna create it, even though you will have to do some concessions. Uh, Now the big tech company are the future for the green transition. Say we're going to be more efficient. I have like different stories. We talk about it like the tractor on the agriculture. You can put like some chip, and with an algorithm, the tractor will see if you need to put more water here, or if you have to cut the grass on this area, either than this one because of the wind, because of the exposure of the sun. That's going to be massive as in terms of efficiency. It's amazing how much you can save in the fuel on the tractor, in time, in energy, in water, etc. But think about like this big tech company, how these algorithms are working. This famous AI. This AI is on big data center managed by, let's name them, Google, Microsoft, Amazon. Depending of where this data center is located, it needs energy. If you put a data center in India instead of Norway or Iceland, it's not the same energy that fueled this data center. You know that India, it's 90% coal. So you have like really to, yeah, know your product, but know the company. Try to understand how does it work, and talk to the client and say, now I know you. I know the products, but I want to open your eyes on this kind of company. So at the end, I would say check at least the 10 biggest company of each fund and bit more deeply, let's say. You'll see a couple of them will be on different fund, because at the end, the fund manager has to choose. He has like a system, and you will find some company that can be the same. But check at least the 10 biggest company. And sorry for the IMF, but no, I won't check all of the company of one fund. Hope, thanks to NEI, thanks to Desjardins and their fund manager, we hope that they are doing already the job. And thanks to Deborah again, making a philosophy and checking some internal ratings for us to be able to take decision and being able to explain to the client. But definitely, yes, lack of data since beginning, because like this technology company, they do not give the data on where their energy, where the data center are, what's the energy that they use. They don't talk about how much electricity you need to fuel ChatGPT, as an example. So it starts like from beginning, and the investor is at the end of the chain of decision. We are just above, and you guys are at the other level in order to give what an investor needs
Yeah.
to take a decision.
That's really interesting point, and that kind of reflects on how deep and granular you can go. And given the role of a financial advisor, where it's you really have to close those sales, you have to grow assets under management, you probably don't have a lot of time to do all the reading. I don't know how much reading you're doing, Thomas, but probably you're really passionate about it. So I also want to
We talk about the
emphasize.
data and tools
Yeah.
and resources.
Yeah, perfect. And I want to also bring back that point that you mentioned earlier about this kind of a need to disaggregate the ESG ratings, right? So we have Morningstar has a sustainability globes rating, which is basically like all ESG together. But I think as an industry, we came to understanding that it doesn't make sense to just bulk up all of these things. Because sometimes there are trade-offs. Sometimes you could be great on E, really bad on S, and then at the end of the year in the middle, and that doesn't mean anything, right? So that brings me to the discussion on the resources and tools. So starting with Deborah, could you tell us some of the tools that are being used currently by, leading advisors to make this easier for them? You're on mute.
Thank you. That was so 2020 of me. So there are a lot of different tools and resources that you can access, but I think that if you have this idea that your role is really to find a balance between meeting the financial objectives and conforming or responding to a client's extra financial or values while investing, I think you're in a good start. So it will never be all one or all the other. It's always a balance between the two. And I think the first step is recognizing that clients want to make money, but they also want to make their money matter. And the way they can do that is through you as an advisor. And if you launched a conversation on responsible investment and use the different tools that we have available to you, it'll make your life easier. The other thing that will make your life easier is not necessarily to look for a product that is 100% matching what the client would want, but really, again, look for that balance between what they want and what they need. And your role is almost, it's never to get them what they want, it's to give them what they need. And I think that they'll be thankful if you show them how what you're offering them is actually helping them understand how this can meet all of their objective. If I'll take just a moment, advise clients when they want responsible investment, they are very much interested in the solution. So they want the solar panels and they want the windmills and they want the companies that are solving problems, but they can't invest everything in there. And your role is to manage expectations. And Thomas just spent a minute explaining how you should manage expectation. Not everything will be green, not everything will be 100% perfect, but it will be a good direction of travel regarding or towards what is usually available. And so taking the time to show them how you have some solar panels, you have some windmills, you have some AI, you have some lithium batteries, for example, if that is what is interesting to them, we'll show them that it is part of their portfolio, but it's not all of it, because we want all of the economy to transition. So we need to invest in all of those different sectors. And you'll find stock stories on the Desjardins Funds website. You'll find articles about ESG issues and how the companies and the portfolios are solving them. And if you're able to give tangible examples, and Thomas gave quite a few, this is how people will understand how they're invested, and they'll understand how this is actually working in the direction that they want. And it's also very good for asset retention, because then they're attached to their investments. They know it's closer to what they want, and they're a lot more patient when markets go wonky.
Thanks, Deborah. Mo, I know you provide all these additional resources. Are there, outside of what you provide from NEI, is there other tools or resources you think of that could be useful? Unless it was already all mentioned.
Well, I second everything Deborah just said, especially the first thing that she said at the beginning. It's more like greenwashing. We need to go beyond the name. Comes to my mind, we have a fund called Environmental Leaders. So it's more like looking for companies that are looking to improve environments. But here's the deal. There is another fund in the place launched by a bank, and this fund is aimed towards women leadership. But if we go deep in details, we will find that our fund within NEI has more companies that have ladies, that have women in their boards than the other funds. So as you can see, there's always this kind of a lack of ESG screening criteria or data. And right now there will be huge convergence between all the standards, CFA standards, SASB, and others. But in my opinion, I fear that it's going to take time to have this full conversion. Where we can see what's happened with accounting. It took many decades to converge between US GAAP and IFRS. So it's going to take the same time converge all the ESG disclosure. But meanwhile, it's more like the onus is more on the advisors themselves to learn more about their clients, search for their values, and to tailor investment products to customize them to fit with their clients. Recently, I met an advisor who selected a lot of our funds because they have this exclusionary screening of not investing in weapons. Why? Because a lot of his clients are vets, so they have PTSD from previous wars, and they like the fact that all our funds don't invest in weapons whatsoever. So sometimes we need to go this extra mile to look beyond the name and search, even to read the investment policy of each fund, or at least the responsible investing policy of the companies.
Yeah, you're touching on a point that I'm making a lot. So this is a perception that nothing other than financial returns matter. But in the world where, you have people with PTSD, you have people who have climate anxiety, and they're struggling emotionally with these issues. They're not related to their portfolio, they're related to their personal views and values. And so isn't the financial advisor almost like helping them address those psychological problems by investing and creating this opportunity for them? So I think this is something that's not really understood fully by the profession, that there's this role of almost not a psychologist, but like your solutions, right? You're helping them solve for the whole combination of different goals, not just the financial ones. And so Thomas, I'll turn to you now. You share about your way of navigating and what are the tools and resources you recommend for the financial advisors.
So yeah, of course, reading the report, sometimes conferences, but it's time consuming. And we all know that our calendar is like, sorry, I'm French, but it's like an emmental that we try to close the hole in order to look at it as a Gruyere, So anyway, we don't have time. So my advice, and I love podcasts. You can be in the traffic, you can be in the metro, you can be everywhere. You can do your cleaning. I don't know. You can listen podcasts, and that's how I value my time. And you can have like a lot. You have one. ESG Insider from S&P is a very good tool. You can ask more. He can refer you to podcasts in French, Amundi, some Deborah. She's going to be like a resource on that. So that's my solutions, let's say. And you can hear like a lot of things. I'm going to relate it to what you said before. The second one is turn to your rep, the representative of the mutual fund company. They have a lot to tell you. Tell them, I want this kind of fund. I'm a lot on green fund, and you heard it, but I want like this kind of fund with this kind of exclusion. Do you have one? Yes, no, okay. Maybe you can refer me to another company, or no, or give me a pass. They're gonna play the game because they're gonna be good on green. They're gonna be good on halal. They're gonna be good on fuel exclusion. They're gonna be good on, I don't know. They are creating it. And sometimes they're going to say, you know what? That's a lot of time I hear this question. We're going to ask to create a fund with this kind of vision. So that's a very huge tool that you have to good resource. Then I'm relating to Deborah now. And with the podcast, you're going to have like stock story. It's true, company story. People, they are making a lot of effort every day. You said before you can see how much you recycle every day, but in your investment, it's dark. It's a night. So stock example, I have one. There is this company. So the company works on development of fibers and create protein mushrooms in laboratory. That could replace meat. It's gonna be it could be huge, and we're not talking anymore about insect who has a flavor of strawberry or what. People, they're not. I don't know. The relation is not there yet, but it's gonna be like a direction. But you have like other kind of idea that you can hear. And then I'm gonna maybe do the advocate of the devil, but on the lithium part, you can tell them, yes, lithium is, we are taking the green direction, but remember that we are touching critical minerals. And now each government, they try to recuperate the mines for them and not coming from China. I mean, you have like to feel them to tangible examples. I agree, Deborah. That's, you need to be tangible. Your money is invested not only on paper or on your statements, but with this fund, with this manager, in this company. Why? Because that's what the company does on a regular basis. So that's why I was saying just before, you need to know the 10 biggest company of the fund in order to give the directions and help them.
Okay, so I take away three things. Mostly, the podcast is a great way to optimize your traveling time to learn. I'm also a big fan of podcasts. The second one would be to actually reach out and talk to your portfolio managers or distribution partners to understand a little bit better the funds and maybe identify other funds that could fit better. And thirdly is that self-education and actually going into maybe a bit more granular pieces of where, different industries or companies are going. Did I miss something? I covered it all. Okay, great. So just out of respect of time, it's already 12 o'clock. I will wrap it up with final thoughts on what do you think would be the probably easiest way to start for the financial advisors who are still very early in this journey. How can they embark on this path of making this part of their work? And I'll start with you, Thomas.
Sorry to repeat myself. Educate yourself. If you don't have time, podcast. Remember, that's how you save time. But for the investor, my message is that you can have an impact. Deborah talked about legacy before. Yes, you can transmit part of your assets that you worked through your life. You didn't have time to help people. Again, life is so contract now, but open the conversation with the clients. Tell them you can have like the testamentary trust. You can give to charitable foundation. At least you're gonna transfer something. You gotta have a legacy, and your impact will survive you. And there are opportunities there. We have the chance.
Yeah. So I think it's a mindset shift where it's like, don't position it as like, oh, I'm trying to sell something just because I believe in it. Like you're there to help your client. So you're there to unlock new opportunities. You're there to build that relationship, and asking those questions will never hurt. They will only open new potential doors. And they're gonna say, oh, my husband also is looking for that, and it's gonna flow with referrals, right? Great. So turn to Mo. And then
And
Deborah.
so just to
Yeah.
add something, but then you can switch the question of return that some people might have like a lot, can say, okay, if it's for your estate, give something to a charitable foundation. We can manage it for you. You don't really care about the return. You already do, and you already have an impact by helping them. And we invested in ESG fund. So then you can switch the question of return if the question comes back again.
Mm-hmm.
I don't trust in this question. I don't believe in these questions.
Got it. Now to you, Mo.
Well, I would say for advisors, they need to with experienced responsible investing advisors, because they will provide them with valuable guidance and support. On a more different level, I would say that if we have a lot of advisors and investors as well, put a lot of lobbying pressure on regulators and even on governments. If the government provides some incentives or tax benefits for sustainable investments, this will encourage both advisors and investors to embrace the responsible investing. Think of some kind of a carbon incentive or tax break, because right now we have a lot of impact strategies and they provide annual impact reports. So we can prove, with papers, with documents, that my 100K or my 200K investments in this specific fund has reduced the water consumption or have increased, clean energy or clean electricity or reduced waste or something like that. Why not lobby the government to provide us with some carbon tax or tax break or something like that, because at the end of the day, if money talks, bullshit will walk. So yeah, so that will help us a lot, and advisors need to seek more education through relevant conference, due diligence. NEI has we have our due diligence in Ottawa this September. So if anyone is interested, just give me a call and we will secure a spot for you. But basically, everything has been said by Toma and Deborah. Thank them for all the insight that they given me today. And thank you, Maria, for inviting me to this event.
Of course. Thanks for sharing your insights. Deborah, I'll invite you to close it off and tell us from your side, what would be the advice and maybe the advice you give to your financial advisors? They're just starting off with this. What is your tip for them? You're in 2020 again, Deborah. Turn it on.
Get comfortable with the topic, get education with ED4S, with the Desjardins webcast. The Responsible Investment Association also has quite a few series of webcasts and information and a website where you can look for colleagues, but also investment solutions. I would also say go slow. And treat responsible investment as you would treat any other investment, any other fund, ETF solution that you're looking to integrate into your portfolio. It is investment at its core. And let's say that ESG, although it is very much part of how we do that, you can treat it as the cherry on top. So look for the financial side if that is what you're comfortable with, but know that the ESG portion will help you relate on a more profound level with your clients. And I would say get started with the conversation. Be ready to learn as you go, and you'll see that most of your clients are not only open, but they're not that demanding. And if you show that you're passionate, they'll be patient and they'll be learning with you.
Thank you, Deborah. And I think it's that also mindset. I just want to emphasize that they're not there to save the planet. You're there to help your clients to either have better performance in the long term, because ESG integration is all about good fundamental analysis, right? You're just not leaving material financial information on the table when you're doing your analysis, or we're going to the impact. And we have this whole spectrum of different options today that, thanks to regulation and standards that evolve, it is easier and easier to navigate. I'll use this time to plug as well to what Deborah quickly said earlier in terms of education. We realize also sometimes it's hard to go from reading videos to actually applying in practice. So ED4S next week is launching in beta test a simulator that allows the financial advisors to practice their conversation with a fictitious client that has sustainability objectives and do the proper KYC, KYP, as well as receive a personalized evaluation based on the conversation. So if you're interested in that, do reach out to us and we'll be happy to include you in our early stage beta testing. And on this, I'll conclude our really insightful session. Thank you very much, Mo, Deborah, and Thomas, for everything that you do to educate the society, the investors, and the advisors. And I hope this is not the last time. We still have a big topic to cover around regulation and disclosures, and hoping you'll join that conversation in the future. Thanks, everyone, for joining, and have a great rest of the day.
Goodbye.
Bye-bye.
Good weekend. Bye.